Good afternoon, Scott Latif Live. Welcome to today's recap. It is Wednesday, another day down. Today was Fed Day. They actually shook the tree a little bit. Woohoo! Whereas we didn't have an up day, we didn't close at all-time highs, and I think at this point, even some bulls would like to see some corrective activity where every other session is not a new 2013 high. You know, the Fed came out to stay in the course, QE continued, and everyone thought that I guess it would be that easy just to continue higher. So at this point, we'll just see what happens. You know, I would say they shook the tree, nothing really bent, nothing broke, but just, you know, maybe a day to clean some things up and see if, you know, we get some kind of cute pull-in. You look at the chart here of the spiders, you will see here is a trend line that's been intact all the way from November, coming all the way up. You know, you take a closer look here because we try and trade these, you know, these more intermediate ranges. This outside day led to you know, a multiple week move to the downside. This breakout failure led to a test of the trend line. Then this time, the last time when they said no QE, boom, came right back in, right below the prior high. And then you had this. And then ever since that Red Dog reversal back on October 9th, we've had a purely clean technical move without 2 down days in a row. So with that being said, you know, today, you know, we had a little bit of an outside day, not a complete one, where we opened up, we traded back below 1772, which we talked about this morning. I said, if you didn't buy on the Red Dog reversal, or you didn't buy when we crossed and broke this descending channel, or when we made new 2013 highs, I wouldn't be starting a new position up here at 1775. But anyway, question is now, do we see some sideways action, which would be nice, or do we see, you know, a little bit of downside, where here's the 8-day, and then here's the 21-day. We haven't tested the 21-day ever since this rally ignited. You know, kind of would be nice to retest this, but we'll see. So at this particular point, what do we know? We know that this is today's low, 1757. That's what we could trade against, and we'll figure it out from there. So with that said, you know, so let's look at a few other sectors real quick. IWM, you know, first time you had a bit of a potent move, okay, which didn't close in the dead lows, but it kind of engulfed this entire range. So if you were you know, trailing and involved in this group, maybe today was a day to take some off. You know, now we'll see what happens. It's the first time it closed below the 8-day since, you know, the move started. Okay, so we'll see if it makes a move down to the 21-day. You know, so you just want to kind of take notice when things happen like that. The financials tried to still, they're the one group that really didn't make new highs with the market, so they're still lethargic. We'll see what happens here. Still holding higher, still right around here. Not much to talk about there. Let's see what the consumer staples do. Just one down day that engulfed the prior day, so we'll see what that leads to. So all in all, you know, I'm looking across the board here. You do have one of these ugly candles, but the question is, what does it lead to? And if you clean up some positions on an ugly candle, you know, you could always add if you know, we retrace lower, or if we just hang in there, you could always get back in. So with that being said, in you know, in high beta land, we could talk about Apple. Apple, you know, opened up a little bit, tried to go negative, and was pretty strong all day. Pretty impressive as far as you know, the action here, where this is your lower range. This was your outside day into Fed day, or not, sorry, Fed day, into, you know, after the earnings. And then today, and I think I tried to short it off the open. It was just too strong. And now, you know, I guess this kind of works off a little bit of the potency of this move. So it's already got it to half. So we'll see what happens here in the next few sessions. If it were to stay around here, and then all of a sudden this could turn into a nice consolidation for higher prices. So, you know, some Apple bulls made a stand right here. As far as just say Google, to see what's going on there. Still hanging around. Look at that earnings move, big earnings move. Here was your bull flag, continuation, and now it's been holding here. And it still held the top half of this, so it still shows, you know, intact, just you know, just an off day. Amazon tried a few times to go, and it, you know, just held around and wasn't ready to go with today. So we'll see what happens in the next session or so. After the close, we got Facebook. So with that being said, the last 2 days I talked about, you know, accumulating some calls into the number. That I like the fact that it pulled off $5-6. It was starting to get some negative sentiment around it. after the big run, it wasn't really prudent to be buying a lot of the stock into it. You could have actually traded it afterwards because it traded through 52. You could have had a nice trade through 55, went as high as 57, and now we'll check out where it is, trading. But as far as the number, it was strong. Their mobile was strong. The conference call starts at 5. Talked about if you wanted to hedge your options at 56 half. Sent out a tweet when I was trading there. Said, you know what, if you want to hedge half, go for it. I didn't hedge half. I'm just going to sit with what I have. I've made that mistake a few times, and I'm going to let it just sit, and we'll see what happens a little bit later. But all in all, it's just it made sense. The stock's been really strong. We've had multiple moves. This was the last quarter of earnings where you had a big gap up. You had a lot of nice trades in the mix here. This was the first time it really actually corrected, and then up here it made a little bit of money short. Okay, and then coming in from $5 off the highs, at least we knew after hours what the pivot was for the first time I went through. Here was a pivot, there was a pivot. So went through all three of them quick. So I think Sperling and Lou made some decent money. I made a little bit there too. But overall, I had the options, and risk is premium paid, and it was hard to take a heck of a lot of stock into a stock that had a move like this, but it was worth a try. Let's see where it's trading right now on the 5-minute. On the 5-minute, it is, let's see, it's already pulled back to 54-ish. Okay, so it's pulled back some of the move. I would say, it really needs to hold around here to stay in the game. So hopefully, you hedged a little bit of your options, and now this would be a decent spot to hold. We'll see what happens on their conference call. But all in all, it just shows you can't really listen to everyone around you. I know yesterday we were trying to be long, and people they were beating me up because on CNBC at 3 o'clock there was an analyst saying that I think it's worth 35, and another technical analyst saying I think it's worth this, and it sold off. And lo and behold, I hope they have them on tomorrow because again, everyone comes out and states their opinions and whatnot, so it's okay to state your opinion. Yeah, I guess it's fine. That's what they did. They should have maybe had a bull and a bear, not just two bears, to get everyone out of what could have been a good position for them. So anyway, we'll see what happens. I'm not going to get into a whole big long and dance about what happened today. Today was one of those days where they shook the tree a little bit. A day where if you sold some strength on the open, you're in a good position to potentially figure out if there is some type of digestion sideways or digestion downward. You still have the end of the month that's coming up, so there's still vested interest to keep things higher. S&P's up by 24%, which I think is kind of crazy. So I'm hoping that we pull in a little bit because, again, that's a lot. So with that being said, it's hard for traders when the market's up 14 out of 16 days or extended from the 8 and 21 day for us to sink our teeth in. So you don't want to chase, but you also don't want to miss. So that's what's kind of going on right now. So if that's you, just continue to take trades. We've been seeing opportunities across the board, both long and short, and holding. I'm along a little of this JCPenney's, not that it's like such a great trade, but it did break this little downtrend. It is trying to go a little sideways here. So if this were to, cross above this prior high, maybe it gets, maybe it gets up to like the $9 area. Also, Target had an analyst day, and it's been battered and bruised and had a nice reversal today. So maybe that continues a little bit tomorrow. I think that this could be something you put in your drawer. I talked about that today, where it's been beaten up from 74 all the way down here. So maybe it tries to fill this gap a little bit. We'll see. We'll see there. Tesla's still just hanging around, where there was a decent short right into this area yesterday, and then it regrouped, and then it closed below. So still take trades on a smaller time frame here. We talked about this trend, and this trend has been really strong, and it actually that's a new trend here. But the real trend of it following the 21-day did break right around here, and then remember when the market made new highs and it didn't. That was a clue to get out of the way after such a strong move, and now it's kind of working its way, and we'll see what happens if it does wind up getting to this 100-day. It's below the trend line, and we'll figure it out. But overall, I think guys are taking trades, and it's now back below that area, so potentially the measured move is even a little bit lower here if it stays there. And with that being said, we'll see what happens. So all in all, Fed day's out of the way. Still lots of trades back and forth. I wouldn't be all in long or all in short, but I would be very specific, and we've talked about that. Earnings season is kind of winding down. You've had some good action, you've had some bad action, you've had some non-events. We'll see what happens tomorrow with Facebook. If they hold it up, we'll see the conference call. Hopefully you hedged a little bit of your options or made some money trading it after hours. And as far as some other things, just know your time frame, know what you're looking at. Don't chase things. Stick to your plan. We're looking forward to Twitter coming out next week. We had some IPOs today that made some cash flow, but weren't great. And we'll keep moving along. That's all you can do is move along. There are times to be heavy, times to be light, and then times for low gross, low net. I think that's one of the times right now. Low gross, low net. Let's continue to have some quick feet and make some money. See you tomorrow. Have a great Halloween. Lots of fun for Halloween. Hopefully you have some kids, dress them up, and it's it's definitely a fun holiday. And if you're a little younger, you go out and have a good time too. I remember those days. All right. See you in the morning. Have a good night.